Hi, JJ here with The Art of Value. Well, the third quarter filings are out by some of the world's best investors. Today I'm going to look at the filings of Warren Buffett and Charlie Munger. I find it really educational to see what some of the best investors have been buying, selling, or doing nothing, as the case may be. Let's just dive in and see each portfolio. First of all, we've got to start with Warren Buffett, right? Arguably the greatest of all time, and Berkshire Hathaway. It's only part of the whole portfolio, of course, because they own a lot of subsidiary companies, but this is their share portfolio, and you can see that Apple is by far and away the biggest position. It's grown to 41.76% of the portfolio. They started buying back in 2016 and it's grown to that big. Buffett's just let it get big in the portfolio. He hasn't cut any, he hasn't really sold, he hasn't trimmed, rebalanced the portfolio. He doesn't do that. So that's how the positions tend to be so big. See, Bank of America is 10%. With Chevron Group at number 3, they added 2.43% during the quarter. And Coca-Cola untouched, and it's been in the portfolio for decades at 7.57%. American Express is next. Occidental Petroleum, which they've been buying a lot of this year. They added 22.58% just in this quarter. Kraft Heinz, it's been sitting there for a long time. It's still in there. Activision Blizzard's there in number 5. They reduced a little bit, but of course that's an arbitrage position. Don't know how long they're going to keep that for. It might just be a short-term thing. Well, they might hold it long-term. I'm not sure if they've decided, but really it's just an arbitrage position, which Buffett and Munger used to do in the old days, and so I think it's probably fun for them to be doing this at this time. Next at number 10 is a new position, Taiwan Semiconductor, which I'm going to look at in depth. Why did they buy this? This was the kind of big reveal for this last quarter. It's over a $4 billion position, which might be big to a lot of portfolios, but in their portfolio it's not huge. 1.39%, but still a significant buy. It's interesting to think about why Buffett might have bought Taiwan Semiconductor. It might not have been Buffett's idea, but it could have been. And I'm going to have a closer look at that. It's the one company out of the portfolio that's new that I'm going to have a look at. So these are positions 11 to 20, a lot smaller, 1% and less. US Bank Corp is number 11, and they actually reduced that 35% during the quarter. HP is in there at number 13 after buying that this year. They haven't done anything more with that. It's still in there. Bank of New York Mellon, they've reduced 14%. They're the kind of significant moves in that group of stocks. They've added 16% to Paramount. That's another add, and reduced General Motors 5%. That's been in the portfolio for quite a long time. Now we see the positions 21 to 30, which is under 0.5%, starting with Visa. Amazon is in there, Charter Communications as well, MasterCard, Snowflake, which was a relatively new position. They bought that before the IPO. That would have been Todd or Ted that organized that, not Buffett, I'm sure. It's not in his circle of competence. There's Ally Financial in there. Even though these are a small percentage of the portfolio, they're still significant in dollar amount. Just because Berkshire is so big, it's not a huge position in percentage terms for them. But of course these don't compare to the top positions with so much bigger percentage of the portfolio. And this is the rest of the portfolio, and their changing is RH, Restoration Hardware, which they bought a while ago, and they've been adding to that 8.76%. High-end upmarket furnishings retailer Louisiana Pacific Corp. They bought Jefferies Financial Group as well. Those are small buys, less than 0.5%, but still significant dollar amounts. $580 million for RH. They're up to now $296 million for Louisiana Pacific Corp. And Jefferies comes in at $12.7 million, which is not a huge position for them at all. One I haven't mentioned there that they reduced 100%, sold out, is Store Capital Corp, which I understand has petrol stations and retail shops, which probably didn't do so well during the pandemic, but they've got rid of that. Don't see really a future in that, I guess. For Buffett, the Berkshire portfolio, I wanted to look specifically at Taiwan Semiconductor today because that's their new buy. And if we look at some other super investors, so-called super investors who own it, there are 12 listed on the Dataroma site here. It's kind of, at this point, widely held. But you'll see that Buffett bought it after the price had come way down. I'll be interested to have a look at some of the fundamentals of this company to understand why Buffett might have bought it. So Taiwan Semiconductor Manufacturing Co., we can see that it's a large cap. The market cap is 427 billion, around thereabouts, and the enterprise value is 385 billion. So this is a big cap company. The thing about Buffett and Berkshire is they've got so much cash, so much money, that the pool of companies that they can actually invest in is pretty small, because nothing small, a small cap is not going to move the needle, a medium cap is not going to move the needle. So the bigger Berkshire gets, the smaller group of companies they have to kind of choose from. It's really only, say, 30 to 50 companies, maybe even less than that. So that's why they own companies like Apple and Coca-Cola and Bank of America and big companies like that, and Taiwan Semiconductor. If we take a look at the share price graph going way back to before 2000, before the tech bubble, we can see that it has dropped hugely lately. It's 41.51% below the high when I took this snapshot, but above the high it's 2,597%. So it's been a very good performer over time, but it's come down a lot. If you see the share graph there on screen, it's come down a lot, like many other tech companies over the last year or two. See a description of what the company actually does. We can see that Taiwan Semiconductor Manufacturing Co. is the world's largest dedicated chip foundry, with over 57% market share in 2021 per Gartner. Immediately I can see why Buffett is interested. Obviously, if it's got that big a percent, it's a possibility of a moat. It'd be interesting to see some of the financials of this company, but that's a huge market share. Scale and high quality technology allow the firm to generate solid operating margins, even in the highly competitive foundry business. Furthermore, the shift to the fabulous business model has created tailwinds for TSMC. The foundry leader has an illustrious customer base, including Apple, AMD, NVIDIA, and looks to apply cutting-edge process technologies to its semiconductor designs. So right there I can see why Berkshire's interested in this. With the price having come down, if the huge spike came down, but they're a leading market share with some huge customers like Apple. This is the first time I've looked at this company. I don't know much about it at all, so coming to it fresh, I can't promise to have any in-depth knowledge. It's just worth having a look to see just on the surface of why Buffett might have been initially interested in it, but if I was going to buy it, I'd do a lot more research than just looking at these brief things. Financial strength from Guru Focus here gets 8 out of 10. We can see the debt to equity is only 0.32. I know that Buffett has said before that he looks for debt to equity of 0.5 or less, and this one definitely qualifies. Interest cover, it is 92, which is really high. I'm going to say this looks impressive. Profitability rank, gross margin of 57, operating margin of 47, net margin of 42. These are good numbers. And ROE of 37, ROA of 21, ROIC, return on invested capital, of 35, ROCE, return on capital employed, which I know a lot of great investors like to look at, Buffett and Munger included, Terry Smith and others. A lot of great value investors take that metric as one of the most important, and it is 30.98 here, so 31. So the average of the S&P 500, I understand, is around 15. So this is way above that. So I can absolutely see why Buffett and Munger and Berkshire are interested in this company. These are excellent numbers that we're looking at right here. Buffett obviously thought it was undervalued when they bought it in the last quarter, and Guru Focus is telling us here on this graph that it's significantly undervalued. This is without doing any research though, just what it's telling me on the site. If you're getting value out of this episode, please consider liking if you're watching on YouTube to help spread it to more people. Appreciate that, thanks. But when I see something like this, it seems worth diving into, especially with those numbers to back it up. On this growth ranking, it gets 10 out of 10. We can see there the 3-year revenue growth rate for a start is 15.5%. So again, nothing to complain about there whatsoever. So on this value rank, which they give 8 out of 10, we can see that the P ratio is 21, just under 21, and the EV to EBIT is 11.98, so that's not high. Those aren't high for a growth company really. So again, I can see why Buffett and Munger and Berkshire are interested. They've changed in recent years. Buffett used to go for companies that had really low PE, valued really low, but Munger changed his mind, saying that for a good company, for a growth quality company, paying up a little bit is okay. Paying fair value or even a bit above is fine. Better to buy a growing company that's a little bit higher in market value than a mediocre company that's cheap. The former will work out better in the long run. But of course, what they want is both. They want growth company at a cheap price. That's kind of the holy grail. Here's a table of financials going back about 10 years. We can see that some of those numbers are very impressive. There's nothing much that I can really fault there. ROE, it's around 30 and it's been consistent. We see the ROCE, the return on capital employed, we can see it's consistently high. I said the average is around 15 for the S&P 500. 600 thereabouts. They've had 26, 31, 23, 23, 26, so really good return on capital employed, which is good to see. And we can see those gross margins are consistently high, 51, 53, 46, 48, 50, and same with operating margin, really good operating margins of 40, 42, 34, 37. Debt to equity's always been pretty low, under 0.5. These financials going back about a decade is as good as you'd ever hope to see, I think. I'm not giving any financial advice here at all, of course. I'm just recognizing that these are really good numbers. I don't know much about the company, but just looking at this, looking at the numbers so far, looking at what it does, I would be interested in diving deeper and researching this company, but I want to know a lot more if I was ever going to buy it. But knowing that Buffett has bought it is definitely something that's made me interested. I mean, this is why it's good to look at these 13Fs, the quarterly filings, to see if there's anything interesting that might be at a good price at any one time. He obviously didn't buy when the price was much higher, but over this past quarter they have been buying, and it's interesting to dive in and see why. I'm actually not going to dive deeper because it's a large cap and I'm focused on small and sometimes medium caps. I do own some large caps. And now to Charlie Munger, who is of course Buffett's partner and part of Berkshire as well, but this is the Daily Journal Corp, which he has managed the investments of. We see there's no change in this past quarter. He hasn't really done anything, which is the usual state of things for the Munger portfolio. He waits and swings big when an opportunity comes along, and he is prepared to wait. We've got Bank of America at the top, Wells Fargo still, Alibaba, which there has been movement on this year, but not this past quarter, and USB Bank Corp and POSCO as well. Here we see the Munger activity over the past few quarters, and no activity this past quarter, which isn't surprising. He's kind of the goat of not doing much, swinging big when the opportunity arises, but waiting a long time. The last activity was Q1 2022, where he reduced Alibaba by over 50%, thought to be for tax loss harvesting purposes, buying Alibaba before that in Q4 2021, Q3 and Q1, ramping up his stake in Alibaba before that. Price has gone down, so he'll be down, but obviously no movement. He hasn't sold or anything. Obviously happy with the position still at the moment. With Munger, I'm obviously going to focus on this Alibaba position because it's the recent activity and there's a lot of talk about it by a lot of people. So we've got quite a few so-called super investors who own Alibaba as well. We can see from the list Charlie Munger's at the top, but Bill Miller, who reduced it this quarter, 22%, Guy Spear, Tweedy Brown Co., Prem Watsa, David Tepper, and others. Here we see activity over the past quarter. More have sold, reduced their stakes than have bought. Viking Global investors have bought for the first time, but we see others there, Bruce Berkowitz, David Tepper, Bill Miller, and Thomas Russo sold out 100%. It's the biggest sell there. He bought Alibaba fairly recently and he's sold out now, deciding it's not worth it. Maybe there's too risk in China. All the reasons that I've discussed in recent videos about Alibaba and the risks. David Tepper reduced 10% after buying in the quarter before that. Bought 100,000 shares before that and reduced a little bit this past quarter. If you're watching on YouTube, I'd love in the comments if you tell me what you think of these investors' picks. What's your favorite pick? Do you think there's anything interesting there to dig deeper into or that you already own? Let me know in the comments. If you think you've got value out of this episode, please consider subscribing on YouTube or in your favorite podcast app. And I'll see you next time. Thanks for watching or listening.